Hello everyone, welcome to Elliottwave-forecast.com YouTube channel. My name is Henry. Today is Thursday, April 30th, and the time is around 2:30 a.m. GMT. And we will be looking at the chart of Google. This is Alphabet 45 minutes chart. We can see right here that the stock rallies as an impulse. Okay, we have a wave 3 here, we have a wave 4, and currently we are in the 5 in blue. You can see in the subdivision 1, 2, 3, 4, right? And then looking for one more push higher. Okay, one more push higher to finish this wave 5 here. Now the cycle is quite mature here, right? And we could in fact, for example, tweak the count a little bit, and let's say calling this 3 and 4 right here, and we are in an ending diagonal, ending 5. So really it is quite mature, and as a result it is quite risky to chase the long side, as I've been saying as well in the previous 2 days with regards to SPX and the DAX and so on. But because of the nature of 5 waves, it can always extend can always extend as much as it wants. So therefore it's risky to try to fade a 5 waves move, right? It's risky to fade a 5 waves move. So this 5 waves here is going to end with 1 or with A, right? It can either end with 1 or with A, because with A in a zigzag, for example, is also a 5 waves, right? But it doesn't matter. Now we're gonna take a look again and zooming out, similar to the DAX and the SPX from yesterday and the day before. If we zoom out and look at the 4-hour chart, now of course the labels here is not complete, right? For all the labels and all time frames, you can always check our service. We have 14 days free trial, and the link is provided in the description of the video. Now you can see right here, this is the March low, March 23rd, right after the COVID-19 sell-off, and from there we have 1, 2, 3, 4, 5. Again, another 5 waves up from the March low, same as SPX, same as the DAX, right? And there are a couple of other indices, but you can check out all the other indices and see what happens from the March low. All right, so here we got 1, 2, 3, 4, 5. You can see if you measure the extension here, right? So this one looking nice as a 5 waves, and we are currently in the process of ending with 5 here. Okay, and once we finish that wave 5 waves up, we can see a tourist pullback. Now this is going to be in the key in the March 23rd low. As long as the dips here can stay above here, we could see at least another 5 waves up, right? Even if it is bearish, even if this is just an A and this is just a B, right? That still implies you can still see another leg higher in, and it should subdivide in another 5 waves, as long as this key level March 23rd holds, right? So it doesn't matter whether it is an APC or 1, 2, 3. The conclusion remains the same. We can see more upside still in the market right now. So the only way that this can fail to extend higher at this point in time is if the structure is not 5 waves, right? So for example, it could be a 5 waves but part of a flat, like somebody's proposed, but I don't believe that is a good proposal, because for example, in order for you to call this a wave C of a flat, okay, you have to call it like this. And we got not just Google showing a 5 waves, we got SPX, the DAX, and a couple of others showing 5 waves. So I think calling a flat is really forcing our bias to the downside, and I don't think that's a good idea. Because first of all, the indices has been it has not really clearly shown us a clear, like a lower low sequence or anything like that from the peak, from the all-time high. So technically calling a flat is not really a high probability in my opinion. And also the idea that calling expanded flat looks from the distribution point of view doesn't look symmetrical. That requires, you know, the C is so extended in price and time compared to the A, so it doesn't look really nice, right? So the only, like, I'm trying to be open-minded. Let's see, okay, if there's any bearish view or anything like that. I think a flat is not really a good sort of count. Secondly, the only way to call this, okay, let's say if we fail to make another leg higher, then the only way I can probably change the count here is if this is some sort of uh, double three, right? So for example, this is AB like this, right? This is AB, and then this is C, and instead of 1 2 3 4 5, this is some sort of a WXY here, like this. Now if it is a WXY, still though, even if it is a WXY, typically the guideline is you will go to the 100% of this Y, right? So still, even if that is the case, a little bit more upside is expected. So this is a, I mean, if you want a corrective structure, that could be something like this. You got 1 2 3 4 5 ending A, and then you got a B, you got a C again, and still, even if it is a, and that's why you shouldn't fade it, because it could be something else. And the fact is that we got a 5 waves or a 5 swing, so you shouldn't try to fade it, because it could always extend, right? So we could also do something like this, for example, if this is corrective, but it doesn't look corrective, honestly. At this point, it's best to label it as a 5 waves, because that looks to be in the best fit right now, and also similar to the S&P and also in the DAX. All right, so that's our update for today, and please do like and subscribe if you enjoyed the video. And as always, check our service. We have 14 days free trial, and I'll see you all again tomorrow. Have a nice day, everyone.